Hello all, Bob Pisani on the balcony of the New York Stock Exchange. Right behind me is the closing bell, where they ring the closing bell on the balcony here. The important thing, we've had a wild week. Hello everybody. Hello Twitter friends, YouTube friends, Facebook friends. Hello Instagram friends. Let me just recap where we're at, because everybody wants to know what's going to be the ultimate impact of coronavirus on the stock market. The short answer is we just don't know. There are optimists out there who are pointing to the fact that China appears to have contained the coronavirus, at least for the moment. However, they have appeared to do this by essentially quarantining several major cities, including Wuhan. That's very good news that it appears, and I keep saying appear for the moment, to be successful, this quarantine. But it was a rather extreme quarantine. They basically stopped people from going in and out of several major cities, including Wuhan. We are hopeful that perhaps we can contain it here. We're hopeful they contain it in Europe. The question is whether those kinds of extreme measures, literally stopping people from moving around, closing schools, closing restaurants, closing all activities, essentially shutting down for several weeks, is what is really necessary to contain that. If that's the case, then there's certainly going to be a hit to economic activity, at least for the quarter. And for some places, it could be rather severe. Restaurants, for example, think about it. You know, if you know anybody who owns a restaurant, if you're out of business for a month, you may not be able to reopen. So those are the concerns, that you don't get the business back. You don't necessarily go back to the restaurant and eat twice as much to your favorite restaurant if you haven't gone for 2 months. So that's the issue that we're dealing with right now. There is some hope, as I said, in China. The China stock market has bounced back as well. Historically, these kinds of events, these kinds of viral outbreaks, SARS and MERS, back 15 years ago, were short-lived events, and the market did turn around very quickly. And that's largely what people are basing their opinions on. The question is whether this is going to happen in the same way with this particular event. Unfortunately, we just don't know right now. There's a lot of unknowns. Elisa, what else do we have?
People want to know if analysts see a recession coming, and do analysts see a bear market?
People want to know, do analysts see a recession coming? Most analysts do not. By the way, recession being 2 consecutive quarters of negative GDP growth. Certainly, this quarter, we're going to see an impact on GDP. It probably will not be negative, but I think that may be a situation that we have to encounter in the second quarter. We just don't know yet. I wouldn't worry so much about a recession. What I'm more interested in is just figuring out how easy it is to contain this. That's the question. So remember, if it's an issue of we can stop this, but you know, for 2 months nobody goes out, wherever it breaks out, well, you know, that could take a while to ripple through the economy, because you could have rolling waves of different cities having different outbreaks. If it's a situation where you only have a few outbreaks, and it's not a big outbreak like we had in Wuhan, that was a very large outbreak, well, then we turn it around quicker. Like I said, there's just too many unknowns right now to get a clear answer. I wouldn't worry about a recession. I just worry about getting an answer to containment.
So, Bob, is it still a good time to invest for the long term?
Yeah, is it a good time to invest for the long term? And the answer is unequivocally yes, and that's the opinion of everybody who's come on our air this week. If you think about this, how old are you? I'm 64, for example. How long are you going to live? Well, I don't know how long I'm going to live. I'm thinking about 90. Okay, there's a decent number to pick out of thin air. That means that I've got another, do the math here, 26 years to live. Okay, that means that I'm not very worried about what's going to happen this quarter or the next quarter. I'm thinking much longer term. So that's the way everybody should be. You should be a long-term investor. I think everybody would agree on that. Now, I know some people like to engage in active trading and move money around. That's fine. Go ahead. But for most people, I think long-term investing is better served, and certainly that's not an issue. Now, if you need the money in a shorter level, shorter term, if you need a lot of money in the next 5 years, well, that's different. And it wouldn't even matter if there was a coronavirus outbreak. You would be less invested in equities if you needed all or substantially all that money in, say, the next 5 years or so. And talking to a financial advisor can help you figure out what your risk tolerance is and when you might be needing money in the future.
All right, people want to know, what impact will the coronavirus have on China in the long term?
What impact will it have on China? Well, I can tell you the impact on this quarter on China has been pretty severe. Now, there's always a debate about what China's economic numbers really are and about whether they fudge the numbers. I'm not going to get into that debate. But they were looking at anywhere from 5.5% to 6% GDP growth, I think that it's fair to say that at least 1 to 2% of that will be lopped off, probably for this quarter. Again, whether it's a long-term economic impact, we don't know. The optimists, I don't want to call them bulls, the optimists this week have been tracking air pollution statistics and air pollution mapping. Now, you can't fudge air pollution because we can see nitrogen dioxide levels in the atmosphere over China. They went way, way down a couple of weeks ago, indicating economic activities, particularly in the central part around Wuhan, dropped dramatically. And they've been coming back up again. This indicates that economic activity is starting to return. So those statistics probably don't lie. That's a good sign. And so China appears to be coming back online to a certain extent. We don't know whether it'll be additional outbreaks or not. That's a big unknown. But as of now, at least that's a positive factor. What else?
Has the virus had an impact on U.S. job growth?
Has it had an impact on U.S. job growth? We just got the jobs number for February, and it was an excellent number today. So as of now, no. But that doesn't mean there won't be. Remember, the effects of this on the real economy, and I'm talking about people working in service industries like restaurants or sporting events, where we've seen a number of big social media events canceled already. That really hasn't happened yet, that ripple effect. We're going to see that more in the next month, 2 months, and into the second quarter. And the answer is we don't have a clear idea of how much it's going to impact job growth yet.
What should we look out for next week in the market?
What we should look out for next week in the market is some sign that there is some kind of containment. Now, the cutting edge of this whole thing, believe it or not, is not in the United States. It's actually in Europe, where in northern Italy, they have had some outbreaks, and they have had to quarantine some towns. These are not big towns, but they're in the northern part of Italy. And here, they've actually stopped people from going in and out, closed schools. And the question is whether or not this is going to sufficiently contain it from breaking out elsewhere. There's been some breakouts in France. I wouldn't call it dramatic breakouts, but there are cases that are occurring there. So what we want to see is whether this keeps spreading. My sense about this is that we're going to continue to have news about the number of cases going up in Europe and the United States for at least the next several weeks. The number of cases in China, by the way, has essentially leveled off. So that's a sign that at least you can do something, that you're not out of control on this. Again, we just need more data, and I don't think we're going to really have a clear indication for the next several weeks, but that's what we're looking for essentially. Anything else?
This is our last question, and it's about the elections. Do you think the upcoming elections will impact markets? If so, how?
It's about the elections. It's been very hard to handicap the elections and the influence on the market because we're dealing with the coronavirus thing, so it's hard to handicap it. On the day after Biden won most of the Super Tuesday states, we did see a clear response, particularly in healthcare stocks. They all rose because, remember, Bernie Sanders was pushing a Medicare for All program that would have dramatically impacted the healthcare stocks. They rose when Biden did better the next day. So there is some impact on this. The rest is very, very difficult to handicap. A lot of market analysts say the market certainly would be okay if Biden did win. Markets would not be okay if Bernie Sanders. This seems to be a standard opinion of most people who come on the air on CNBC. Don't kid yourself. All of this is really, really hard to handicap right now. And I can tell you, for the moment, everyone is very much focused on getting their hands around the coronavirus story. That's it from here. I'm Bob Pisani. Everybody have a healthy, happy, and safe weekend. Thank you.
Thank you so much.